Hi, everyone who's joined this webinar. It's great to be hosting this webinar. My name is Paul, Regional Managing Director for Avora in the UK and Ireland, and I'm also one of the founders. So I'm a sustainability consultant by experience. I'd like to welcome you to our short and punchy webinar around assessing, monitoring, tracking, and progressing net zero carbon. It's a slight change of track from previous webinars, because we think it's important that the industry and you as attendees hear about opportunities and approaches that help drive sustainability forward and progress the sustainability agenda, and in particular approaches and tools that are out there that help with decarbonisation, help manage decarbonisation. And as such, in this webinar, we're going to be joined and we're going to by Superowner and by Philippe Lafort, who is the CEO and founder of Superowner. And we're going to introduce Superowner and talk to you about how it as a tool can be used to plan and track net zero carbon, and most importantly, progress from something that's considered as a risk and a cost to a value opportunity and a value accretive opportunity. So one of the key things that I want to highlight before we get in is trends that I see and that Avora see, and that's that the need to address transition risk and net zero carbon in particular is not going away. It's very clear that it's relevant, it's important, and it needs to be addressed. And many organisations recognise this, and a lot of our clients, a lot of the industry that we work with and engage with, have set goals, have set aspirations, and have set targets. But my experience is that those goals and targets need to be progressed now, and we need to move forward from a phase of assessment and evaluation into a stage of implementation and action. And there are an awful lot of assessments out there, but it's about making things happen now, and we need to think about how we do this in a way that, as I said just a few seconds ago, that a way that creates value. And if we can do that, then it generates possibilities and opportunities. So we need to remove those blockers and convert risk into value. So tools that support this are going to be really helpful. And at Avora, we're working in partnership with Superowner to move beyond simply delivering audits into asset optimization and progression, and incorporating Superowner into both our assessment process and also using it to track progress for clients that we work with. So with that, I'm going to introduce Philippe, and Philippe will take you through Superowner. One thing I would like to highlight is that at the bottom there's a Q&A button. If you have questions, please pop them in the Q&A section, type them in, and we'll have ample chance to raise them and discuss them at the end of the session. And we'll be able to cover those questions. If we don't get through all questions, then we'll be able to reach out to you directly and feedback after the event. But yeah, thank you for joining. And Philippe, over to you.
Hi, Paul. Thank you very much for your introduction. I'm just going to share my screen, and hopefully everybody can now see that. So as Paul mentioned, short webinar and introduction about Superowner. Today I'm going to walk you through who we are, the opportunity, and we'll do a short case study. My goal is that we have not a too long presentation and we leave ample time for a Q&A. I'm very keen to hear your thoughts, your questions, and your feedback when we are doing that at the end of the session. Thanks a lot in advance for joining us and for your presence today. I hope you find it interesting. First, a little bit about us. Superowner is an investment analytics for the energy transition software. I am myself the founder and CEO. I have both a technical and a financial background. I've worked previously for Tishman Speyer and Patricia, and our CTO Yves comes from the high-level sports arena, where he was previously building the simulator and in charge of the performance for one of the America's Cup teams, LNG Red Bull Racing. He also has a PhD in applied mathematics, which is very helpful for the kind of things that we do. We're active in Germany, UK, France, Ireland, and the US. And our mission is very simple. We're here to deliver profitable decarbonization for both the owner and occupiers. The context we're in today is that if we want to meet our Paris 2015 target, or if we want to meet our science-based target, globally, we need to increase the amount we invest in energy efficiency for buildings by about 2.5. So we need to spend 2.5 times more in order to reach about 570 billion per annum. In the UK, we need to start spending 10 times more because we haven't spent enough, and probably the building stock is not as good as elsewhere. The reason why this is not progressing as fast as we would like to is that there are not really tools to help make those investment decisions yet, or the current practices and approaches are very inaccurate or complex. And they, most importantly, do not solve the split incentive problem. Just to be clear, the split incentive problem is when the owner or the asset manager invests into energy efficiency retrofits and the occupier benefits from the savings. Today, when an asset manager, an investor, an asset owner has to do an investment into decarbonization, it really requires making a leap of faith, because the data isn't perfect, because the methodologies are imperfect, and there's not guaranteed results at the end. And that's a very uncomfortable position to be in because it's perceived as very risky. And most asset managers, owners have a fiduciary responsibility to basically, get back to their clients, to their board, to the investors, and make money for them. And so today, this is very difficult. So that's why we're basically built Super Owner. And that's why we're here to help that decision-making process and to clarify the value creation and to show the value creation as well on those processes. So we start from the energy audit. It could be an energy audit from Evora. It could be an energy audit that a client of Evora has from a third party. And we basically use this data to look into whether it would create an interesting investment opportunity. Most of the time, if the data we have doesn't meet regulatory risks, doesn't address the split incentive problem, and the returns are not quite there in terms of where they would have to be to satisfy an institutional player. The first step we have to take is to look into how much value is created by this energy efficiency works. What that means is we look into the value of the savings realized, we look into the rental uplift potential, we look into the value created by installing, solar and generating power on site, and we basically show how that value can be shared between an owner and an occupier. Quite often, we don't stop there because the initial assessment doesn't necessarily meet the regulatory risks. So for instance, maybe it's not aligned to where CRREM needs to be in 2050. And then we do another step where we basically improve basically the investment and the actions recommended so that the regulatory risks are met and so that the returns can also be improved. And by improving returns, what we do is we look into subsidies, tax breaks, financing, whether it's government or commercial. I don't go into too much depth in this webinar, and it's not the point, but if you'd like to, by all means, reach out to Paul or myself, and I'd be very happy to schedule a call so that we can walk you through this in more detail. But going back to the case study here, what we do is we look into an office building with a single occupier somewhere in the UK, and we had the energy audit as the initial data set, and what we looked at doing was maximizing on-site energy generation, minimizing the equity contribution and de-risking the approach upfront from both a regulatory standpoint and an occupier standpoint. And so when we talk about maximizing on-site energy, we talk about putting solar panels on the roof, but also putting solar panels on a carport to maximize the production. And it's quite interesting to do that in the UK because the prices of energy are quite high, so the return on investment can be quite high because effectively you sell it back to the grid or you sell it back to tenants. We then look into minimizing equity contributions by talking to third-party financing bodies like Barclays or like NatWest would be very happy to support those kind of projects because they understand them very well. And then when we talk about de-risking the approach, we make the building compliant with CRREM, and we also look at whether the occupier would be interested in such a scheme. In this case, we found out that the occupier is a large UK wholesaler who has a target of being net zero in 2035. So we think that it's a great case to get there. The outcome is that if we have no super owner, basically there's a equity contribution, so cost basically of 740,000. The net profit is minus 605,000 because we can sell some energy back to the grid and the property strands in 2042. With the first step, we basically realized that there is value generated and that this value can be shared between the owner and the occupier, reaching an IRR of about 12%, but the property still strands in 2042. So we brought it even further by looking into additional measures to prevent the stranding, so to remove basically all the transition risks and basically increase the IRR with third-party financing and with more returns to get to a level where it would be acceptable by an investment a manager to undertake those works. So obviously this is not what we deliver. Deliver is what you see here, which are basically a set of dashboards and tools that help our clients understand where the value is and how we basically processed all this data. And so we'll look into owner profitability, analyzing, how much costs are they, where are the revenues coming from, what's the net profit. We'll look into where the emissions are being reduced. We also analyze the profitability for the occupiers. It's a bit simpler in this case because it's basically about rent, OPEX and savings. And we really always ensure that there is a win-win scenario at stake. So we ensure that tenants basically have a positive net savings. What we do with the compliance is to really use it as a sort of a constraint to solve a profitable path. And so you can see in this case that we've used the CRREM pathways because the legislation in the UK is being revised this year, and we don't expect to have something clear at the point where we did this, so we had to go for another means. But basically, you can see that on both the carbon abatement curve and the energy efficiency abatement curve, the property is below. We look into all the interventions that are proposed. We analyze, for instance, the tax shield, the tax position. There's quite an interesting regime in the UK where the tax shield can be quite substantial. We analyze the ROI of each and every measure. We analyze the multiple of each and every measure, and we really make sure that we leave no stone unturned so that we have the best possible case forward for decarbonizing this building. And I don't have time to show you everything today, but I'll to show you what it looks like from an occupier standpoint, because we also optimize for them. And here we can see that this occupier would have basically a positive outcome, a positive net outcome from this work. So they would be saving money and at the same time reducing their carbon emissions. And we believe this is a great starting point for a negotiation because the message is very positive. It's to say you can basically accelerate your decarbonization, and you do it by saving money. And just summarizing what we've talked about, we're really here to systematize the value creation in the energy retrofit or the decarbonization. It's the same thing. Evora can carry out the initial assessment. They can also help you take initial assessments that have been done by third parties. It doesn't have to be theirs. We then come in to identify and optimize the proposals that have been done so that you have a clear, profitable roadmap. We're working on a next product, sorry, to help you de-risk those positions, where we will basically help you negotiate with occupiers to make sure you can have a clear option to carry out the works before you start spending money. And then Evora helps you basically overseeing, tracking, and making sure your projects achieve what was initially envisioned. You can work across the entire value chain of the commercial real estate life cycle. Obviously, mostly active in asset management and acquisition, but we can add a lot of value in the sales process by showing how much value can be generated, and we can also support you in fundraising when you need to have a methodology that proves to investors that you have the right tools in place and support to decarbonize buildings. There is more. I just wanted to give you a little sneak peek because we're releasing the next version of our software in a couple of weeks. And we'd be very happy to tell you more about it. So please reach out to Paul or myself to schedule a call in the coming weeks so that we can tell you more. I just want you to remember that what we do is we turn your energy audits into investment opportunities that you can share effortlessly with your technical and investment and ESG teams. And I'm going to hand over back to Paul now, and I'll come back on for the Q&A. Thank you very much for your attention.
Thank you, Philippe. Thank you. I'd like to sort of finish with effectively a call to action, because I think this is important, irrespective of approach, of technology used. As an industry, we face a huge challenge from a net zero transition risk perspective. So we need to think about 5 steps to progress. Firstly, we need to know where we are from a portfolio perspective, and we need to evaluate net zero position. We need to map progress to understand where we are. Yes, looking at things like GRESB and other schemes, but really understanding the costs, implications, and potential value add opportunities through detailed assessment. But then after that, we need to build a strategy that drives measurable action and value and execute it, and then monitor it on an ongoing basis. So this is really the key point for me. We need to move from a phase of assessment to a phase of action, execution, and monitoring and progress of that execution. So with that, I've got a bunch of questions that have come through, which is great. So I'm going to go through those questions, and Philippe, it might be worth you popping back on the screen again, and we'll do those. So the first question I can answer is a commercial one, and is Super Owner now owned by Evora and available only to Evora clients? And the news is absolutely not. Super Owner is a completely independent business. We work with Super Owner with some of our clients, and we engage with Super Owner to work together for the good of our clients, but we're completely independent, and it is not available to just Evora clients. So I thought I'd save you answering that one, Philippe. I thought I'd answer that one. The next question I'm going to ask, and this one is for you, Philippe, is the example that you showed was an asset level example. Can Super Owner be applied across portfolios?
Yeah, the answer is yes. So the tool we're releasing now in July is effectively capable of doing that. We always start on a building level. We always start with data that is accurate and valuable from the audit perspective. This is not something I didn't say in the presentation, but one of the reasons we partner with Evora is that we want to have trusted partners who can deliver quality audits so that we can make quality investment plans. So while we work on those investment plans on an asset by asset basis, we can then aggregate those assets into whatever portfolio you want. It could be any shape or form, so that you can then have the visibility of your opportunity, of the risks, and then basically of the key timings on the portfolio level.
Thank you. And then you showed an example of you feed an assessment in. Next question, this feeds on really well. You feed an assessment in, let's say at asset level, that shows where we are and it maps progress, and you're able to track that across, if you're multiple tenant or single tenant, the benefits to each of those tenants. Um, how often should you monitor progress? What are your recommendations?
So I would say progress needs to be monitored every time there is material information coming in. So let's say you start with a feasibility study, which is effectively an energy audit.
Mm,
Um, you may then, ask for quotes, and you may have different pricing than what we showed or that you had. You can then update your scenario. We will also update your data anyways, because energy prices change, forecasts change. So if you have done an audit in 2025 and you're not doing anything until, let's say, 2026, it will basically suggest to make an update, because the condition of the world will have changed. And then once you start implementing things, it's very important to track, those changes to see whether or not your targets are being met, and we'll be doing that too.
okay. And another question is, can it be applied across multiple countries? I think you mentioned at the start some of the countries you're operating in. Surely some of the information, the source information in terms of actions and improvements, will come from the audits. However, that there needs to be mapping which is based on climate scenarios for different countries. So yeah, could you just reconfirm which countries you can support at present, Philippe? And also perhaps this is a little addition from me, what your plans are going forwards as well in terms of
Yeah,
other geographies.
I would say right now what we've shown is 5 countries, but with this next platform release, we're gearing up to be able to cover Europe and US. We're
Okay.
basically following where our clients are, and I would say most of the demand comes from those geographies, and so for us, we're fairly flexible. To look at different countries. It's just a matter of basically having the data to give you the best possible for scenarios, but that's something we're in the process of acquiring.
Okay. And a question on you showed a bit on the screen around the tenant engagement. Do tenants or occupiers have access to it, or what's the typical approach? Is it extracted from the system and they're shown the outputs of the system? I've got some follow-on questions. There's a few
Yeah,
questions about how we engage with occupiers. So I think what would also be helpful. So I'm chucking a bunch of questions at the same time. I'm trying to group them together so we get as many covered as possible. So do you share access with the tenants? And also when you think about the tenant improvements, presumably we're looking at, right, there may be costs involved and sharing of costs. But is it effectively articulation of the fact that sharing of those costs will lead to reduced energy costs and therefore lower impact for you? Is that
so yes, you can absolutely share the data with your occupiers, with tenants. We also work with tenants, so it actually goes both ways.
right?
And here, because we're like a neutral third party in the middle, we feel like it's very important to provide unbiased and transparent information. So the answer is yes, you can. Uh, the second question was around the contribution and how much they're expected to pay.
Yeah,
Effectively, what we're really looking to do here is to find scenarios where everybody benefits. And what we find is very often you're going to be investing, let's say, 5 million into retrofitting your asset, and then you're going to create 100, 200,000 savings per annum. We'll look into the ways where tenants can basically contribute to some of those savings while still having a net benefit. And it's not really a contribution in cost, because those contributions don't really contribute to increasing rent and therefore the value. And we're very much value driven from that standpoint. I mean, and so we're basically helping structure those arrangements with the tenants. What's also interesting for us is that because we work across multiple geographies, we understand the different legislative frameworks in multiple geographies. So if you're an owner in France or Germany, you have basically mechanisms in the law by which you can increase rent following energy efficiency capex. If you're an owner in California and you want to charge your occupier for a solar energy that you're producing, you can also do this, and it's provided by in the law. So we would always be aware of these things. We would understand the law and make our recommendations based on that or based on the best practice. I mean, as I mentioned earlier, I spent a number of years at Tishman. I was an acquisition and asset management director. So I've been through these processes myself a lot, and those experiences have also fed a lot how we've developed the tool over time.
Okay, another question on tenant related question. Are green leases a prerequisite for the benefit of sharing to accrue to the owner during the term of the lease in net lease situations? So
Uh,
do we need green leases?
I would say no, because I think there's not a clear definition of what a green lease is in the law, and we don't base ourselves on that. A green lease is by concept is a lease whereby there's an agreement of collaboration between two parties to accelerate or to the decarbonization or to share information, to say the least. But we also understand, and I've experience in this, that it's always very hard to share to get the data from the occupiers. What we come up with here is a very effectively different value proposition when you engage with the occupiers, because we say, hello, you can save money and reduce your carbon. Would you want to basically do something with us? And that's a very different approach than saying, hey, let's share data.
And does Superowner use the pricing carried over from the energy audits, or is there some form of database of costs or works in the region?
Yeah, that's a very good question. Again, we don't second guess the auditor. That's very important, but we would check. So if we have a doubt, we would verify the numbers, and it does happen that when we look at an audit that was carried out a few years ago, and we find there is like discrepancies, and we then explain those discrepancies to the client, or we basically talk directly with the engineer or who was on site and who did the audit to say, hey, like, what are the assumptions here? We don't understand them. Can you please explain your rationale for that saving or that cost?
Yeah.
But we
So
don't want to, like, again, like something I said, and I just want to really emphasize it, is that our belief is that if you want to have a clear and a good quality audit to know where your starting point is for decarbonization, we need eyes in the building to look at what's happened and to make a recommendation.
the key there is the audit feeds the process. The data from the audit feeds the process. It is, of course, checked to feed into the system, and obviously sense checked against benchmarks to make sure that it makes sense. But primarily, we use the audits that feed into the
Yeah.
system, whether they're produced by Avora or anyone else. Just to reiterate, and you did say this, Philippe, so thank you. It is not, it is not a prerequisite that use Avora audits for this. It can use any audits that have been produced previously. Obviously, one of those key checks that you need to do is if the audits have been done some time ago, technology, pricing, etc. changes. So there may be the benefit of doing an update review before that is fed into the system. Another question: what happens if there's no data from tenants? What do we do?
When we work with Evora, typically on the baseline consumption, we would know we need the total baseline, right? We need 100%, otherwise it doesn't really make too much sense.
Yeah,
But we would know how much we have in terms of actual data. We would know what that data is, whether it's meters, whether it's bills, and so on. And then we would have a remaining portion which is estimated. And what's interesting here is that through Sierra and their tools, Evora can basically give us an estimate for comparable buildings. So
Mm.
we can always build it back. We have to then be very clear about the fact that the baseline is not perfect. The hope is that once you engage with your tenants with something like this, they'll be like much more likely to share their data because they understand they've got something to gain.
Yeah, and absolutely. Just to reiterate that to create a model and to work this model, we need to work on 100% of the energy consumption of the building. Where that's not available, there are ways of building proxies and building estimates in. At Avora, we work and we have an entire team, an entire function that focuses on data collection and filling those gaps in partnership with tenants, in partnership with occupiers, to get as accurate as information as possible that can feed into the assessment model. Okay. Does super owner software collect the consumption data from all sources, smart reading, smart metering, invoices, meter readings, for example?
So we're not a data collector software, just to be clear.
That's us,
Yeah,
by the way.
yeah,
Yeah,
that's
yeah,
exactly.
yeah, yeah.
So we're 2 years old as a company, and that boat has left the station a long time ago. I mean, there are already companies, that were created, I would say a long time ago, but a long time ago, about 10 or 15 years ago, like Evora, who specialize in that, who are really very good at that, and we didn't need to do that. So we rely on those people, but our job and our core function is really in investment analytics and really transforming that data into financial data that asset manager or investment manager understand, and so that they can basically work with it to make their investment decisions.
So just to provide a bit more clarity from Avora's perspective on this, our kind of area of expertise is in that managed service data collection from whatever source. We're source agnostic. We can collect data from meter readings, from invoices direct from energy suppliers, and feed that into our platforms, our analytics platform, Sierra, and then with permission from clients, feed that into the super owner calculation system, the super owner system, to generate the outputs that Philippe has demonstrated to you today. Okay, great. Um, Philippe, another question. Any plans for expanding this beyond energy and carbon? What about waste and water? Is that something in the pipeline, or is that something for the distant future at this stage?
It's not on the roadmap for now, waste and water, because I guess our job is to help, those investment decisions and to make them to accelerate them. So we're pretty focused on that core problem, I would say, and the products that we have in the pipeline, like Super On a Go, are really, I would say, geared to facilitate that for our clients. And at the same time, we're very flexible and we never had that request before. And so we're open to hearing what our clients need and to serve them if they need it. So I guess in short, while it's not on a roadmap today, if it's required, it will be on a roadmap tomorrow.
Yeah, flexibility is there. I think Philippe is
Yeah.
the key message. I think what I'd add to that is that um, energy and therefore carbon are critical and material factors to all buildings. So we need to consider energy use and associated carbon emissions and take action to decarbonize significantly. I do appreciate that water and waste have costs and carbon associated with them as well. But the impact and the cost benefits are not always, but often at a lower level of materiality. At Avora, we certainly consider waste water improvement opportunities and wrap those into wider sustainability improvement programs as and when required. I've got one last question, which is for me, which is, do we have auditors in Ireland, energy auditors in Ireland? The answer is yes, we do. We work through partnerships in Ireland, and we have providers who can supply in that region. So yeah. So anyway, that's it. Thank you so much. Lots of questions. It was great to get those questions. This was a short, sharp session to introduce you to Super Owner. I strongly recommend that if you've got any questions or want a demonstration of how the system works, please contact either Philippe or myself to just go through that process. As I said at the end of the formal presentation component, I think what's really important is that we understand the risks associated with decarbonisation across our portfolios that we manage. We develop our net zero plans, but most importantly, we move from that planning stage to that action stage. So incorporation of those action plans into budgets, into asset management plans, and articulation of that value to the tenant, to the occupier. And with that, I would like to thank Philippe for joining me on
Thank you very much.
this presentation. I'd like to thank everyone for joining and listening in. It's good to see we've got a good core of people who've stuck through the whole session. So thank you so much for that. And yeah, please do contact us if you have any questions or want any more information. Thank you very much. Cheers, everyone.
Thank you. Bye.
Thank you. Goodbye.